The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem. Joining us now to discuss Bitcoin price and more is Gareth Soloway. He's the Chief Market Strategist at Verified Investing Crypto. Gareth, great to have you on the show. So there's a lot of fear in the markets with Sam Bankman-Fried and his arrest, the collapse of FTX, as well as Binance, which has halting withdrawals on USDC stablecoins. What does that mean for BTC here?
It definitely does create a little bit of worry within the investing public, and we know we already have that with the bear market that we're seeing. But I actually look at the arrest of Sam Bankman-Fried as one step in the healing process of the crypto markets. And again, you have to have these individuals be held accountable. It's part of that healing process to get people to trust again in the crypto markets. And it's really one more thing that should lend kind of the solidity to bringing forth not only transparency, but also bigger money to come back in. I don't think the lows are in just yet in crypto, but it certainly is getting closer and closer with these events.
Now, we're talking about lows, but today, certainly in the green, up almost 4% for Bitcoin, jumping after the U.S. Consumer Price Index report showed slower than expected November inflation. Dive into that for us.
Yeah, absolutely. So we saw the CPI data come in better than expected, meaning that it was a little bit less inflationary than the market had worried, right? So the key is that right away started the markets ripping to the upside. We saw Bitcoin moving above $18,000 for just a short period of time. The NASDAQ 100 was up over 4%, which is a humongous move for that market. But interestingly enough, we've actually seen the markets come back in. And if you dissect the CPI data, a lot of that lower inflation was due to the reduction in oil price. And we've seen oil come down from well over $100 a barrel to basically in the mid 70s now. And so again, the market is saying, okay, what's the real reason here? Is it food that's being reduced? Is it really overall inflation? Or is it just one or two components that have dropped precipitously? And then we're also looking towards that Fed statement tomorrow. And again, that's putting investors on a very uneasy path. We know Jerome Powell does not want asset prices to skyrocket because it adds to the inflation pressure. You get 401ks up, you get Bitcoin accounts up. Everything makes people feel richer when it goes higher. It makes people want to spend more money, which then creates a kind of supply-demand disruption. And that, again, causes prices to go up. So it's very uneasy right now where you have investors having to realize that the Fed is not on their side for the first time since 2009 in this economy and in basically asset prices.
What are you expecting out of the Fed tomorrow? What are you watching for?
Yeah, so the number one thing is they're going to raise interest rates by 50 basis points. That's a slightly lower raise than we've seen the past four meetings. We've seen 75 basis points each of the last four meetings. So they're going to be coming down, and I think they'll continue to reduce. The next one should be 25 basis points, and eventually we'll get to zero hikes. But remember, zero hikes doesn't mean they're reducing interest rates. It just means interest rates won't go up any further. So I think investors have to be ready for this Fed that's not a friend to the market. It likely will push the economy into recession and probably global recession across the board to really get inflation down to 2%, which is kind of their long-term mandate. And so investors have to be ready for that. And I think this is going to be one of the this 2023 is going to be one of the interesting periods where we see, in my opinion, Bitcoin start to flip from a risk asset to more of a safety play. And I think you'll see that when it bottoms out in 2023, you'll see investors start to look at it more like a safe haven in an otherwise uncertain environment.